Rand trading 781 at the moment, so hovering around as weakest levels. The euro, though, this morning traded as weak as 119.15 against the dollar, so the Rand really tracking those euro movements.
Yeah, a fairly quiet morning behind us, Stephen, as far as the Rand is concerned. We have seen, of course, the euro tanking on Hungarian fears. We've seen equity markets on Friday afternoon also succumbing to that sentiment. And the Rand just really following global action at the moment. Really all eyes on Europe and Southern and Eastern Europe now, as we see a lot of concern around fiscal balancing acts and the austerity measures that come into play. We had the new government in the UK this morning talking about their challenges, their fiscal challenges. It's all about debt. It's all about how it's going to be funded, and that's weighing on markets at the moment.
And of course, none of these problems are likely to go away anytime soon, are they, David?
Well, I wouldn't think so, Stephen. How do you do away with the 10, 11, 12% budget deficit in a matter of days or weeks? As we've said many times in the past couple of weeks, you have to cut spending, you have to raise taxes, both of which are not great for growth. That's concerning investors globally at the moment, and it's not really about one country at this point in time. The other factor to bear in mind is, of course, is if we do have a sovereign default somewhere in the world, how does that affect the banking sector? And of course, the markets are very fearful of a Lehman type scenario where credit rise up, and of course that leads to the feared double dip.
And of course, Hungary isn't even a member of the European Common Monetary Union, so that doesn't have the same problems really for the markets as Greece does. But of course, banks must have bought some of those Hungarian sovereign debt.
Well, that's the point, Stephen. Banks hold a lot of debt, global debt, paper from around the world. And of course, if we do have a sovereign default, how's the banking sector going to hold up? Does that then cause one or another bank somewhere in the world also to fold? And then we have the all-dreaded contagion stepping in. So it's a real big concern at this point in time. Sovereign debt is, or sovereign crisis around the debt is what it's all about, and that's what the focus remains.
David, your view on those jobs numbers that came out of the US on Friday, because it seems the market was very disappointed by those numbers and they were really just boosted by the census workers.
Yeah, I think, Stephen, what we've seen, we have seen some job creation in the US. One has to remember, of course, that to remain, on an even keel as far as unemployment is concerned, the US has to create somewhere in the region of 200,000 jobs a month. Now, the absolute job number was 430, somewhere around there. The unemployment rate did come down slightly, but largely the recovery that we've seen over the last 18 months globally has been a jobless one. And of course, that's the concern. Until we see some real employment kicking in, it's hard to see how the recovery that has been that we've seen is going to be sustainable, particularly when governments around the world have to cut back on spending.
Well, just looking at the euro weakness over the past month or so, we had those golden forex numbers out from the Reserve Bank this morning, and it looks like the weak euro had quite an impact on our numbers for the month.
It's hard to see how much of those numbers are revaluation and how much are losses in actual reserves. In other words, that we've used some of our reserves to pay down debt or to pay some commitment offshore. I think the trend is far more important than the absolute number. Although South Africa, by international standards, does have relatively low reserves, but one has to bear in mind that's probably been good for us over the last 2 to 3 years, simply from a point of view as where do you put those reserves at the moment, and how do you contain the costs of managing those reserves, particularly when global interest rates around the world are at zero.
Of course, the Reserve Bank does say in the commentary on its website that it was due to the foreign exchange operations of the bank as well as euro revaluations. So do you think that there may have been some other debt paying down by the bank there?
I think there were certainly some commitments that were paid, Stephen, for sure.
Just taking a look forward, we have manufacturing production numbers coming out this week. And of course, we had the PMI out a week ago almost. The PMI, slightly disappointing. It's come down from the highs that we saw back in February. What's your outlook for the manufacturing production numbers going forward from here? Are we also going to see them leveling off?
Stephen, I think so. It's hard to see how you must remember, I suppose, that the South African economy is very dependent on the global economy, and given the current state of affairs around the world, I think we're going to see some of this concern filtering through into economic data, and of course that will eventually affect South African data. So there's not a great degree of confidence out there, and I think investors around the world and potential investors are very, very cautious at this point in time to see how things pan out, and I think that's going to start showing in economic data as in the weeks and months that lie ahead.
Well, just given the lack of confidence we're seeing in the markets at the moment, do you think that the Bank of England and the ECB will keep rates unchanged when they sit later this week?
I think there's no doubt about that, Stephen. Certainly the Bank of England, they don't have room for any lowering of rates. The ECB, of course, does still have a little bit of room to lower rates. I think, however, should they lower rates, they're really admitting that they've got serious problems. And for the moment, they'll be reluctant to lower rates, but certainly no chance of rate hikes.
And the rand from these levels, would you expect it to continue drifting at these weaker levels?
I think we certainly stuck in a new range. I think 775, 785 is the short-term range. But if sentiment weakens any further from here, we certainly see a close above 785 as potentially dangerous, and certainly the 795 level on the top side is a real good technical level. Which should see us then move up to around 820 should we close above that level. But really, it's not about technicals at this point in time. It's all about how global sentiment pans out, Stephen.